All right. Hello, ladies and gentlemen. My name's Justin, Business Development Manager here at Fullerton Markets, bringing to you a special class on the basic yet profitable trading strategy known as support and resistance. Now, before we, dig deeper into support and resistance, there's just something I'd like to let people know. The first is that yes, this is a basic strategy that is known by quite a lot of people, right? But that does not mean that it is somehow an inferior trading strategy. Personally, this is one of the main strategies I use when I do my own trading. Okay. Now, a lot of people seem to have this notion that having a much more complicated trading setup will give them an edge. All right. You might see some people and their charts are very, how should I say, a bit but there's a whole lot of strategies going on. They have a lot of indicators, they have a lot of lines, they have a lot of objects on their screen. All right, and a lot of them can be very confusing. But sometimes just using a simple support and resistance can make your trading so much more effective. All right, if you guys weren't using support and resistance before this class, well, afterwards I hope you guys will learn and use support and resistance. All right, so without further ado, let us begin. All right, so the first question is, what is support and resistance? All right, though this is very common in forex trading, not a lot of people think that it's worth their time. But I'm here to tell you that knowing the support and resistance is very important because it tells you how people react or how a majority of the traders react at this price level. All right, let's first take the line on top. It says resistance, correct? All right, what do we mean by resistance? It means that it is something that is blocking us from moving above. All right, and on the bottom we have something known as the support, meaning it is stopping us from falling all the way through. All right, so to make this even easier to understand, all right, imagine your house. If you have 2 floors in your home, whatever you are stepping on the floor, that is the support. Now, if you want to go to the next level, you're gonna have to, climb a set of stairs and move on to the next level. All right. So, what is stopping you from immediately going to the next level? You have the roof. You have the ceiling. All right. The support tells you in this general area that people are more inclined to buy instead of sell. All right. And the resistance tells you that people are more inclined to sell than to buy. All right. Let's take a look here on the left-hand side. We can see here prices are moving. Whoops, sorry. Prices are moving. They drastically fall down towards this level. And we notice one thing. Once it, got to this level, prices just refused to move down even lower. And in fact, prices started to move towards the upside. All right. This drop down and then this pullback to this level indicates that this area is a support, meaning when prices are here or at this price level, people tend to buy more and sell less. All right. Another thing we can say is the buyers are much more aggressive and the sellers are much more conservative. Why is this? All right. Remember in forex trading, when you're buying, all right, when you're buying, you're expecting prices to go up. So it makes sense for you to buy when prices are cheaper, when prices are lower, right? So when prices are low enough, people tend to buy, all right? So let's go back to this earlier example. Prices dropped down, pulled back, and started moving towards the upside, all right? Meaning from here to here, this area here, the buyers or the bulls have taken control and the people selling or the people shorting are on the back foot and they are not really shorting. They're not really entering their short trades, all right? However, if prices get to a high enough, if prices get high enough, all right, people might start saying, hey, the prices are a bit too high. It might be a good time for me to start shorting or selling, all right? Why? Because when you are shorting or selling in Forex, you want to sell at the at very high points because you're expecting prices to go down, and you will only profit if prices do go down. All right. So in this area, we see here that one candle goes up, a second candle tries to test this level, but then prices start moving towards the downside. All right. This movement of going up and then the pullback towards the downside indicates that we now have an area of resistance. All right. Clear so far? Meaning at this point, people are selling more than they are buying. The sellers are much more aggressive and the buyers are much more conservative. That's why at this point, prices start moving towards the downside. And as you can see here, the resistance is tested once again before moving towards the support, before moving upwards once again. All right. So having the simple support and resistance in your trading setup can easily tell you how people react in certain areas. All right. Let me give you guys an example of how to use this. Imagine you are in a support. You are near the support. All of your other indicators or trading strategies are telling you, hey, right now might be a good time to enter a long position. All right. You have that extra, strategy technique, which is known as the support and resistance, that will tell you that maybe this is a good point for me to buy. All right. And another way you can use it is, what if you are at the support and and your other trades are telling you to perhaps it's time to sell. Maybe take a step back, reassess, and then think about your trade. Just drawing these simple lines can drastically increase your success as a trader. All right, if you use them right, if you study support and resistance, and if you know how to use them correctly, yes, they are very, very powerful. All right, clear so far? Let's move on. All right, so let's dig a little deeper into support and resistance. All right, when the price moves up and then pulls back, the highest region is now the resistance. All right, when the resistance also indicates that buyers are much more conservative and sellers are much more aggressive. And inversely, when the price moves down and then there's a rebound, the lowest region now becomes the support. And this indicates that buyers are much more aggressive and sellers are much more conservative. Okay, let's take a look at the charts. All right, we have something known as the area of conversion. All right, what does area of conversion mean? Basically, a support or a resistance that gets broken through will convert into its counterpart. Okay, once again, an area of conversion is where prices break through a support or resistance, and in turn, the previous support and resistance will be converted to its counterpart. Okay, so if it was a support before and it gets broken through, it becomes a resistance. If it was a resistance before, but it is broken through, it becomes a support. Okay? All right. Let's first take a look at this, and then we will handle questions later. All right, sir? All right. So here we go. Let's take a look here on the left-hand side. We can see here that prices are bouncing on the support. Prices are bouncing here on the support. Prices move up, and then they move down. All right. And as you can see here, the support did not hold, and prices actually moved even lower. Now, this is the area of conversion right here. When the prices broke below the support, as you can see by this candle, this support became a resistance from that point on. All right. Once again, the prices move downwards and a new support is formed. So our previous support became a resistance, and we now have a new support. As you can see here, prices moved towards the upside, and it briefly tried to break through the resistance only to fail and move towards the downside once again. So this resistance held, and now we are back at the support. All right. And then once again, this support was actually broken through. All right. It moves towards the downside, and the support from our previous support is now a resistance. All right. and now we have a new support. And briefly, just briefly up here, the resistance became a support, but very briefly, only for one candle, because the very next candle dropped below. Now, as you can see, this also indicates to us that we are in a downtrend, simply because supports are continuously broken. All right, we have a lower support each and every time it breaks through, so that signifies to us that that people are doing more selling. Okay, this is one way to identify the trend. All right, there are many more out there, but this is also one way. All right, let's move on. Here is another example. All right, this time we are looking at an uptrend. Why? Because as you can see, a lot of resistances were broken. All right, down here on the bottom left, we see prices moving towards the resistance. It tried once, failed, moved back down. It tried again, and this time it was successful in breaking through. Hence, this is known as the area of conversion, where the resistance has now been converted into a support. Okay? Once again, a resistance was tested. It was successful in repelling the prices. Prices moved back down here once again. All right? It was tested again and again and again until it was successfully broken through. All right? The resistance here is broken through. It is now the support. All right? The area of conversion. All right? Prices move towards the resistance again, but it fails and it moves down. This previous resistance is now a support. All right, as you can see here, the resistance is broken many times, which could signify an uptrend. Okay, it's very important for us to have a look at charts and see things from a by actually stepping back on the charts. If we are very zoomed in on our trading, we might miss a few hints such as this. All right, so I had an earlier question. When would it be best to where would it be best to draw your lines, on the body or on the wicks? Well, personally, I'd like to draw it on the highest, and that, for example, in a given period, the highest candle body instead of the wick. Okay, personally, I would like to put it on the body, because a wick could be a one-off. Could be a one-off. You understand? That's why putting it on the body is much more safer in my opinion. Okay, though that does not mean I do not sometimes target the wicks with the support, or I don't target the wicks. All right, and someone is asking what is a recommended time frame. Well, this question gets asked a lot, but if, for example, you are using, let's say, a higher time frame, let's say a D1 time frame, meaning each candle represents 1 day. All right, the support and resistances at this level are much more significant than support and resistances on the H1. All right, just to give you guys an example, the higher the time frame, the stronger the support and resistance is. And sometimes you could, for example, put it on the day 1 candle and move down to H4 or H1. All right, so if, for example, you put it on the H1, since there are a lot more candles and prices, it's a smaller time frame, the support and resistance might hold, but it might not be strong enough if you follow. And in the next few slides, I will show you why that matters. All right, so there are 2 ways for you to trade the support and resistance. The first is known as the bounce. All right, imagine you have a ball. All right, imagine you have a ball, a bouncy ball. All right, if you throw the ball on the ground, what happens? The ball will hit the ground before it will jump back up. This is known as a bounce. So the first way to trade support and resistances is by using the bounce. All right, here's an example. If the prices fall towards the support, all right, over here we established a support line, a support level. All right, prices jumped up, it falls back down, and from here we want to enter a buy a buy trade or enter a long position because we are expecting this support to hold and for that prices to start moving upwards. So we are trading and we are expecting prices to bounce off of the support, all right? And as you can see, it did move upwards before falling down and then moving upwards once again. Now, there's one key thing I want to share with you guys. When we have a support and resistance and we have a line, for example, this resistance, don't think that the support and resistance is just limited to this line, all right? The support and resistance is a general level, general area, okay? Not just where the line is per se. So for example, this line, this does not mean that this is the only area that we consider resistance. The area above it as well can also be considered the resistance. Same down here, the area below can also be considered the, the support, all right? So this is one way to trade when prices are moving towards the support level. We buy because we are expecting prices to bounce, all right? But what if prices are moving towards the upside, all right? We can see here on the left that this resistance was established, this general area. Prices moved down to the downside and moved up again where this resistance was tested. And over here, we want to enter a short position or sell because we are expecting prices to bounce from the resistance to the downside, okay? It falls down, we are at the support, and then moves up again, we sell, moves up again, and then we sell, all right? So if you have a support and resistance, you can trade the sell, you can trade the buy, all right? That's how powerful this strategy is. It is so very, very simple. All right, it gives you definite areas where you can target, where you can enter your trades. All right, here so far, this is just the first way to trade support and resistance. The second is by trading what is known as the break. Okay, so here is an example. All right, we buy when the price breaks up through the resistance. As you can see here, the red line indicates your resistance and the green line represents your support, okay? Prices tried to break here, did not go through, so you could have entered a short position here. Prices tried again, you could also enter a short position here, but on this try, prices actually broke through, all right? When it breaks through the resistance, it means there is enough power, there are enough long positions to move prices higher. And if prices are moving higher, you can also then enter a long position, all right? Against our earlier strategy of trading on the bounce, this one waits for breakouts, all right? When prices break the resistance, enter a buy, okay? Why? Because the resistance would then become a support. And that means you are near the support once again, meaning it is possibly a good time for you to buy. And inversely, selling. Yes, my friends, when prices break below the support, that support then becomes a resistance, correct? Remember our area of conversion from earlier. Since it becomes a resistance and we are near that point, maybe it's a good time for us to sell because more people are selling and there are a lot more short or sell positions open, and this might move prices lower, all right? So let's do a quick recap. If we want to trade a bounce and we are at resistance, we sell. If we are at the support, we buy. If we trade on the breaks or the breakout and we break through the resistance, we buy. And when we break the support, we sell, okay? Remember earlier when we talked about the strength of a support and resistance on a higher time frame, this is a good application, okay? A support or a resistance on a higher time frame might be a good indicator for you, all right, to see if you wanna buy or sell, all right? Because it's let's just say a higher time frame it means it's stronger, right? So the possibility for a bounce is there, and you can decide whether or not you are leaning more towards the bounce or the break. If you go down on a lower time frame, you can see support and resistances are broken through much more often. All right. Though, but on a higher time frame, it's not always the case. But when the higher time frame does get broken through, prices tend to really, really move towards that breakout position. All right. So, for example, if let's say there's a break on the support on a D1 chart, that might tell me that there is a whole lot of momentum for the prices to move way lower. All right, so someone just asked me if they can enter the SNR on the H4 and trade on the H1. Yes, that is possible. That is possible. You can also do the same D1, go on H4 or even H1. Okay, it depends on your trading, your time frame, your other strategies that you probably use. All right. So yeah, in my personal trading, I like to start off at high points. I like to start off on D1 and see if I can draw support and resistance points. If I cannot draw on D1, I might move up to week 1. Okay. But generally, D1 is a good area for you to draw your support and resistance, and then work your way backwards to H4 and then H1. Okay. So that is why support and resistance is a very, very powerful tool that you guys can use when it comes to trading. Okay. Personally, I love support and resistance, and I've been trading for quite a few years. And I found that, you know, sometimes having these simple and powerful trading strategies is one of the best ways for you to profit as a trader. All right. So, ladies and gentlemen, that is it for me. My name is Justin, Business Development Manager here at Fullerton Markets. I hope you guys enjoyed our class, and I look forward to seeing you all in our other classes. Thank you all, and goodbye.